Do, 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 do. All right. United States Steel Corp. Ticker X. You could find that on New York Stock Exchange. Tango calling from StockTwits said, Pat, can you check that out? And cool. That chart, look at that, man. Wow. Stage 2 ascent on the monthly candle chart. Well, that company has been there for a while. I don't have data previously to 91. Maybe that's when it started. Exploded right here. Awesome explosion. Dip below 12 month average. Hard to hold. Not the best of stage 2s on the monthly chart. Lots of noise, lots of wicks below that inclining 12 month average. And then when you got far away from that 12 month average, that is just crazy blow off top. Down, buyers coming in, but that's your warning sign right there. That's issues. Next month, again, never closing below that 12 month average. And then after that, bam, 2 months, full retrace, practically full retrace, all the way back to the breakout. Wow, and has been suffering since then. Lower highs. Nothing much. Yeah. Still hasn't overcome these highs right there. What are we now? 12 month, declining 12 month moving average. This has broken down back in August of 2018, but we're still inclining 12 month average, so you couldn't short yet. And the 12 month average started to go down. Where is it? Right here, starting to go down slightly. Not this one here. So kind of tough. Sometimes you don't get the perfect timing. Here is some support. Went through that. Pulled back up to that monthly defined support and resistance. Close to a still declining 12-month average. And now still continuing down. Where are my other levels of support? Well, this is the closest one we have right here. All right, so let's see if there's signs. Is this thing going back up? You can't go long as this doesn't. You have to let the market. You need those sellers to get out of there. You have to wait until everybody forgets about the stock. You have to wait until you get a close above 12-month average. And that's choppy stuff. Very hard to play even on 12-month moving average. You want it like this. And when you get a close above, you're out. When you're starting to flirt too much, these high volatility moves, closing below 12-month average, you're getting whipsawed. You're not maximizing. It's not an A++ setup. That's not what you're going for, this type of setups. You want clear-cut, small moves above an inclining 12-month average, never really touching it. Always staying above, out of danger, but not too far above to wake up those sellers. But right now, we have a classic stage 4 breakdown in progress, pullback, could have shorted, maybe added here. And now it's keeping going down. March, April is not finished yet, but right now we're below close monthly defined support. Wow, so here we go. The Mansfield Relative Strength Indicator is so awesome. It really tells you fast. Like if you want to look at anything, just look at those zones. Most of the time, you're in a downtrend, right? Because remember, you have to be below a declining 30-week average for this to be red. So just that notion being below a declining 30-week moving average, it means the price action is going down. So just that. Then after that, you add the fact that you're underperforming the SPX or underperforming any other instrument you want to put there. And it just adds up to being putting the odds in your favor. Inverse all that, green overlay above an inclining 30-week average, you're in an uptrend. Broke down below Chimoku cloud right here, sank, never really challenging a 30-week average, going through that monthly defined support, sank, pulled back up, and here would have been beautiful entry right there where I circled it on that move back down. So green, that red candle, That would have been nice, low risk entry right here. And right now we're keeping the momentum down. So what's positive here? It's hard to short from here. I wouldn't short at this level here. You want to scale in more at the beginning. You want to scale in when you're close to 30-week moving average. If you want to see turnaround signals, what you could do is you could look at the daily. Remember, smaller time frame is going to start turning over faster than the higher time frames. Here we have that death cross, so we're below it, below it, below it. We're above the 50-week moving average, but never challenging that still declining 200-day moving average. Pulling back down on that monthly defined support and resistance. Back under Ichimoku Cloud defined resistance. Here we created a little green one, a little support, but we never got back on top. And now we're creating some more Ichimoku Cloud defined resistance right there. So if you're below that, if you're below a declining MA, you are in a downtrend. Oof, look at that. Crescendo, green, red volume right here on those down days. So no signs of turning around right there. We could dig deeper. We could look to see if we have some weekly defined divergence with the fast stock. Remember the fast stock on the weekly? It's a good reservoir. When you have weekly divergence on the fast stock, it could give you fuel for next move up. But remember, can't just take it in a vacuum. You need to add it to the weight of evidence that, oh, okay, this we could be turning around right now. Okay, lower. Let me move that. Okay, we're still doing, remember to have, you need a green close right here to say that we're starting to turn back. So that's low. So we're creating lower lows right now. And the fast stock in the weekly is not digging in deeper, but it's not done yet. So until we get really a green candle right here, then this is going to turn up, and then we're going to have slight bullish divergence created on the fast stock. And then you get to see how long that consumes it. It goes up, then the price action goes up until you hit weekly defined support and resistance. If that doesn't hold, then you go test that declining 30-week average. If that doesn't hold, then you go test previous highs, previous support turn resistance. And then after that, you get to see if you stay above or you turn back down and you go back down below. So that's the reservoir of energy that builds up that fast stock. But if it's not a point to enter right now because you still have that monthly defined downtrend that's working against you. So this type of scenarios, even if you consume it, that fast stock, that reservoir, it empties, but then the monthly trend is going to hurt you. It's going to help you bring back down. So instead of having this type of scenario where you go up, you might consume, you might have a rally back up, and as soon as you get any type of resistance, then after that, the monthly higher trend is going to knock this down, and you're going to go back down. Fast stock monthly. And now the fast stock monthly, are we in the bull power band? So when you're in an uptrend, you want to be here. And when you start crossing over, and if you enter here, then you're in a downtrend. You want it to stay here. There's no question about bearish or bullish divergence on the monthly. The monthlies, I'm in the zone here for an uptrend, just like the 12-month average is helping you. Same thing here, downtrend. And when you flip through, halfway mark. Oh, testing. No, down. And once you go in the other territory, your change of shift, change of direction, it adds up right here. Right there. Can I mark it? So you had the beginning of when you cross down below, you have the beginning of a downtrend. So it just adds up. What you want to see, instead of taking a risk, you look at the daily, you start crossing over that 50-day moving average. All right. Look on the weekly. Oh, I have some bullish divergence. Nice. Setting up nice. But don't get in there. You really wait until they add up and they're ready to go. And when you start consuming that weekly bullish divergence, it should start bring the fast talk out of the power zone of that bear move, and hopefully you get something like that. Oh, where you start going across, you test that line, and then you go back up. And by the time, if you see this on the monthly chart, on the fast talk on the monthly, and you start getting back here, the price action is going to look a lot better. You're going to have that 12-month moving average going to be flat. You'll be going above that 12-month moving average. If you're up here, it looks good. You could almost guess that the chart is looking pretty good, that you're pretty much above a 12-month moving average. And here, same thing. You're pretty much probably below a 12-month moving average when you're in that negative power zone right there. And that's what you want to get. If you want to really get early, wait till you cross halfway through, and then when you start creeping into that the power band, the fast talk on the monthly, then that's the weight of evidence that you want to be in. That adds in, that gives you the final clues that, okay, this is it. We're going for a little stage 2 ride on the monthly. That means many, many weeks on the weekly that you'll be in a stage 2, or at least you'll have the odds in your favor that you might be entering a stage 2's power zone. But until then, very hard to go long here. At least wait for a little bit to get out of halfway territory for this to look better. So still early for X, but that's how I break it down, guys. Okay, hope you enjoyed it. Thanks for watching, guys, and don't forget to subscribe. Ciao.